two rules. Two rules. That is what Warren Buffett says that you should have in terms of an investment strategy. So what are they? What are the two, might you ask? Welcome to Wink. Here we are with what investors need to know now. We're going to talk the best investment advice you've ever been given. That's what we're doing in November. Did you miss October? Did you miss last month with what scares you the most? What scares investors the most? Also talked about what scares Cokie the most, bonds, as a refresher. Links to all of these topics you can find multiple places, but most of all at alphavest.com, where we want you to subscribe to the blog, where you'll get updates when we do this broadcast, as well as 411 Live, 5:30 a.m., bright and cheery, 5:30 a.m. every Monday morning. We do 4 things before 11 a.m. to make it a perfect day, and one of those 4 things is winking, or learning what investors need to know now, focusing a little bit on finance. So moving beyond what it scares the investors the most, because we're now in November, I wanted to focus on the best investment advice you've ever been given. So how fitting, we're gonna open it with Warren Buffett, one of the most renowned investors of all time, with his Berkshire Hathaway holding company that has performed gobs and gobs, hands and fists over that of the S&P 500. But he says there's 2 rules of investing, right? What are they? He says, number 1, don't lose money. And number 2, don't forget about rule number 1. So it's pretty easy, right? I'm going to give you a little more than that from Warren in terms of his best investment advice. And one really good nugget in particular is that of his big platform of low-cost index funds, and so owning low-cost index funds. So do you own them? Do you have them? What are they? It's very easy to Google and find which indexes have ETFs that you should be using. By the way, you don't need mutual funds. Don't own mutual funds. Okay, there's another tip. But the best investment advice from Warren would say, buy some low-cost index funds. And when he says index funds, it's a little outdated in terms of the soundbite, because you can do that through an ETF or an exchange-traded fund. The exchange-traded fund, just fun fact for you, is going to be much better tax efficiency for you. So I usually liken the difference between owning the mutual fund or the low-cost mutual fund, or owning the ETF, to the mutual fund is riding the bus, and then the ETF is, let's say, having your own Uber, okay? They both are going to cost the same. Actually, the mutual funds usually cost a little more, but with the ETF, you're going to be in control of your tax situation. Whereas when you're on the city bus, you're driving down from point A to point B, you've got many stops along the way, and those stops are other investors. So as other investors force the hand of maybe the manager to sell, Apple stock, which the fund may have owned for a very long time and has huge embedded capital gains, you may not have experienced those capital gains in your time of owning that fund, but you're going to have a capital gains tax passed on to you the same as everybody else. No way. Let's don't do that. With the ETF side, your capital gains are absolutely only your capital gains. So there's a bit of Warren and a bit of Cokie. How about that? So he says buy low-cost index funds, and I say absolutely, but make it an ETF index fund. They're out there. It's unbelievable that you can find many S&P 500 index funds, and they will all range in what it costs you every year. You can find them costing you as low as 0.03% per year, or you can look up and find that you, within your 401k plan, are invested in an S&P 500 fund that may be charging you as much as 0.8%. It's wrong. Okay, back to what scares what scares me the most is investors, most likely in their 401k, where their hand is a little bit forced, investing in an index fund that's costing them any more than, say, 0.10% per year. S&P 500 fund, you should be paying very, very, very little, less than 0.1%. So that's where the industry gets you, is that which one do you choose? Well, if it's an S&P 500 fund, they should all return the same. So just make sure you're in the lowest cost provider. That's an oversimplification, but it's one that you can roll with here for the sake of today's broadcast and what investors need to know now. Wanted to give you a few other of Warren's rules that I think are appropriate and fun. So there's a little sprinkle of some finance and some other life lessons in here, which is very perfect day-esque. And if you know me, everything needs a perfect day wrapper. Warren also wants to encourage you, and this came from CNBC, a Warren Buffett blog. Think long term, stay the course, because the market does crazy things. So, little blurb about that. I'm always encouraging you to download Liberated Investor. It's free. It's on alphavest.com. Go to the resources or services page. The Liberated Investor download is right there. Yes, it's going to ask for your email. And yes, immediately it's going to send you a 13-page, very easy to understand, the 4 steps you need to do to get ahead of Wall Street. So again, you're not investing in an index fund that's costing you too much money. But one of the things within the Liberated Investor is having a dynamically and actively managed portfolio. So that sort of addresses the staying the course, because the market's going to do crazy things. If you have an advisor who has a dynamic and an active approach, which you should, that's going to keep you from doing crazy things, okay? So it's going to help you remove that emotion from investing. So to Warren's point about staying the course, sometimes we have to put some things in place, some governors in place, right, to shock collar us, to not do bad things in crazy, hairy markets. The way to do that is to have an advisor who will manage the portfolio actively with, again, yes, low-cost index funds. So you'll get those 4 things in the Liberated Investor download. So do that today. Alphavest.com is where you get that download. It's free. It's my gift to the industry. It's me trying to help investors get unstuck. Because if you can think to yourself, there's only 4 things I need to do, let's do them. I'm hoping that you find it underwhelming, right? I love this next piece that Warren said. Marry the right person. So I don't know if that resonates with you, but number 3 on his list of 6 in this blog, he said, marry the right person, associate with people who are the kind of person that you want to be, and then that means you'll move in that direction. Number 4 was low-cost index funds. Number 5 I like very much, which is invest in yourself, which is super important. How do you invest in yourself? Health and wellness is huge. Obviously, you should all be looking to, first and foremost, your paychecks and any employer-sponsored plans that are offered to you whereby you get a match. You need to take that match. If you don't, put in 5% to your 401k because you're going to get a 4% match, that is just money and a raise that you're leaving on the table that could compound to be hundreds of thousands of dollars at retirement. So do that today if you're not already. Furthermore, if you're already doing that and you have additional cash flow, you need to be putting in a full Roth IRA contribution if you're eligible. I'm not eligible. There's a lot of people who aren't eligible. Are you eligible? You don't know? Grab a consult. So when you're on the alphavest.com page, it's 15-minute free consults. I do 20 a week. I hope you're number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 through 20. I love it when this consult slots get filled. So grab one and we can talk about Roth eligibility. And then the last thing Warren Buffett offered is that money isn't everything. So I like that he sprinkled in a few things that aren't necessarily so financial, and saying that money isn't everything is very perfect day-esque, because as 411 will tell you, finance is only 25% of it, or one in 4. So with that, thanks for joining us today for what investors need to know now. I hope that a tidbit here from Warren on don't lose money, number one, and number two, don't forget number one, is somewhat helpful. But again, the key to that is having an advisor in place that can actively manage your assets in low-cost index funds and stocks alike, in good markets and bad. So download Liberated Investor from alphavest.com, and the steps are going to be much clearer. So with that, we're going to offer some more nuggets through the course of the month, so we hope you'll tune back in, as well as to Facebook on Monday mornings, 5:30 a.m. Yes, you can watch the replay. It's the Facebook page is Cokie Perfect Day 411. So that's Cokie Perfect Day. Find us there, and look forward to your questions and to your downloads. With that, make it a perfect day.